Fresh tensions have erupted around the Strait of Hormuz after US President Donald Trump announced plans to impose a 20% fee on cargo transiting the waterways and reimpose a blockade on the Iranian ports. Now, Trump said that the US would guarantee safe passage for commercial shipping while preventing trade with Iran. The announcement comes amid fresh military exchanges between Washington and Tehran, pushing oil prices higher and weighing on the global markets. Iran responded by reiterating that it remains the guardian of the strait, while signaling that any transit fee should be determined by Tehran rather than Washington. Let's listen in.
No, I never reached that conclusion, but we're hitting them very heavy tonight, as you know. We're hitting them. We have tremendous amounts of ammunition. We have numbers that we haven't had in years, and we're hitting them very hard, and it'll continue, and we'll see what happens. But we're knocking out all of their offensive capability, and we're controlling the straits. We're putting the blockade back, and it's a blockade not for anybody but Iran. In other words, anybody doing business with Iran can't go through. Everyone else will be able to go through. So it's a blockade. It's a very strong blockade. The blockade was probably more effective even than hitting them, but I think the combination is the thing that really does.
And the U.S. inflation may finally offer some relief, but not enough to settle the Federal Reserve's nerves. June CPI is expected to cool as falling oil prices pull the headline inflation lower, while core inflation is likely to remain sticky, driven by services and AI-related demand. The data comes ahead of Fed Chair Kevin Warsh's first Capitol Hill testimony, with markets closely watching for cues on the rate path. And Fed Governor Christopher Waller has urged policymakers not to fight the last war on inflation, warning against reacting too quickly simply because the Fed moved too slowly in 2021. While he still sees a credible path for inflation to cool, Waller said that precedent prices pressures from the AI demand, tariffs and geopolitical tensions mean rate hikes remain on the table if needed. And the U.S. budget has taken a bit of a hit from the tariff refunds. June posted a $120 billion deficit, reversing last year's $27 billion surplus after the Treasury refunded nearly $50 billion in tariffs that courts ruled illegal. The repayments outweighed fresh customs collections and comes as Trump's tariff strategy faces fresh legal and policy uncertainty. Even so, Washington is preparing a new round of trade duties later this month. And the AI chip rally has hit a speed bump. SK Hynix plunged more than 15% in Seoul after its blockbuster Nasdaq debut, marking its biggest single-day fall in nearly 2 decades. The sell-off spilled across global semiconductor stocks, dragging Samsung, Micron, and the broader chip index lower, while South Korea's Kospi slumped 9%, triggering a temporary trading halt.